Hey there. Let's dive into the latest buzz from the financial world, shall we? Welcome to Whiteboard Invest, your #1 go-to source for clear and concise investing knowledge explanation and news updating daily. Hey there, folks. Welcome to today's video. We've got some juicy crypto updates lined up. First off, Hong Kong's Bitcoin and Ether ETFs are having a tough time catching on. Then, Gary Gensler has some thoughts, calling crypto the trickiest asset in the U.S. market. Ever wonder what the U.S. government is up to with the $13 billion they snagged from crypto crooks? We'll spill the beans. Oh, and by the way, Bitcoin's price today is a cool $63K. Plus, Grayscale just pulled their Ethereum ETF futures fund proposal, and CEO Richard Teng's making waves, urging Nigeria to release Binance's director. Hang tight, it's going to be a wild ride. So, let's chat about the new Bitcoin and Ether ETFs in Hong Kong, shall we? They've just kicked off, but it seems they're not quite the hot-ticket item compared to the ones in the States. In their debut week, they only pulled in about $22.5 million. Now, that might sound like a lot, but it's peanuts compared to the billions the U.S. ETFs raked in during their first days. Here's the scoop. Those 3 Bitcoin ETFs that launched at the end of April, they've got $262 million under their belt, but most of that was already pledged before they even hit the market. And the actual cash flow coming in after they went live? Under $14 million are the Ether ETFs. They're in the same boat, with just over $9 million coming in, totaling up to $54.2 million in assets. Now, you might be wondering why there's such a big difference. Well, it's all about size and access. Hong Kong's market is way smaller than the U.S., with a cap of $4.5 trillion compared to America's whopping $50 trillion. Plus, the growth's been a bit sluggish over in mainland China since 2022, which doesn't help. And here's another kicker. If you're in mainland China, you can't jump into these ETFs unless you've got a Hong Kong residency card in your wallet. That's a pretty big roadblock for potential investors. The folks at So Value pointed out that even if you're using platforms like Futu Securities, you've got to be outside mainland China and the U.S. to trade. And don't get your hopes up about southbound trading through the Hong Kong Stock Connect. It's not on the table right now. Oh, and let's talk fees. After a teaser period with lower charges, the management fees for these Hong Kong crypto ETFs are going to hit between 0.85% and 1.99% annually. That's a lot steeper than the 0.25% average in the U.S. So, for the long-haul investors who are bullish on crypto, the U.S. Bitcoin ETFs are easier on the wallet. But it's not all doom and gloom. These Hong Kong ETFs have some neat features like being pegged to 3 different currencies and letting investors trade in and out with actual Bitcoin or Ether. And according to OSL, a crypto exchange, there's a bunch of crypto-savvy folks in Hong Kong, nearly 80% of them, who are planning to invest in these new ETFs. So there's potential, but it's all about getting past those hurdles first. In a nutshell, while Hong Kong's spot Bitcoin and Ether ETFs are bringing some fresh ideas to the table, they're facing an uphill battle to attract investors, thanks to a smaller market, less liquidity, tight access restrictions, and higher fees. But hey, if they can clear those barriers, who knows? They might just catch up to their U.S. cousins. Before we dive into today's next market-breaking news, make sure you hit the like button and subscribe to our channel to fuel us up for even hotter content than ever. So, today's Bitcoin price is clocking in at $62,500, which is a tad lower than yesterday. Taking a look back over the past week, Bitcoin's been on a bit of a ride, starting below $60,000 and then gradually climbing up. Even though we're seeing a slight dip today, it's not all doom and gloom. People still seem pretty optimistic about where Bitcoin's headed in the long run. Of course, we've got to keep our ears to the ground for any big news or changes that could shake things up, like new regulations or shifts in public sentiment towards crypto. But hey, overall, Bitcoin's showing its resilience, staying strong even when the road gets a bit bumpy in the short term. All right, let's break down what Gary Gensler, the big boss at the SEC, had to say on CNBC's Squawk Box. He's got his eye on the crypto world, and he's not just watching for fun. He sees a lot of shady stuff going down and thinks it's about time the SEC stepped in to clean house. So here's the deal. Crypto might be just a tiny slice of the massive $110 trillion U.S. financial market pie, but it's serving up a hefty portion of scams and frauds. Gensler's like a referee in a game where the rules are still kind of fuzzy. He's all about protecting the investors and making sure companies play fair and square. And then there's Ethereum. Is it a commodity? Is it a security? That's the million-dollar question. And the SEC's still huddling up to call the play. They're not rushing the decision, though. They want to make sure American investors have all the info they need to avoid getting blindsided. Gensler also touched on some hot topics like the SEC slapping Robinhood with a Wells notice and the legal tussles with Coinbase. He's clear that his team's job is to keep the playing field level for everyone. When it comes to auditing and asset valuation, like the drama with Trump Media and Blackstone's Bright Fund, Gensler's stance is crystal clear. Keep it honest, keep it accurate. No funny business with the numbers, please. As for his future, when asked if he's eyeing the Treasury Secretary spot or planning to stick around, Gensler played it cool. He's focused on the here and now, feeling pretty honored to serve in his current gig. In a nutshell, Gensler's chat was a peek behind the curtain at how the SEC operates under his watch. With the U.S. government trying to get a grip on the crypto market, the SEC's pushing for a solid legal framework to keep things in check. Before joining the SEC, Gensler was a prof at MIT and chaired the CFTC under Obama. He's no stranger to Wall Street either, with 18 years at Goldman Sachs and a hand in crafting the Sarbanes-Oxley Act. His take on crypto hasn't wavered. He's been calling for tight reins on this Wild West market to shield investors from risks. Under Gensler's lead, the SEC gave the green light to Bitcoin ETFs for some big-time funds, ushering in a new era for crypto to mingle with traditional finance. So, while he's got a rep for being tough on crypto, he's also opening doors for it to join the mainstream finance party. Let's dive into the U.S. government's crypto treasure chest, shall we? Picture this. A whopping $13.8 billion in crypto, all scooped up from the bad guys. Hackers, scammers, you name it. And just recently they snagged another 3,940 BTC, worth a cool $251 million, from a drug lord named Banmeet Singh. That's just the cherry on top of their already massive pile of 216,788 BTC. But wait, there's more. It's not just Bitcoin. Uncle Sam's got his hands on 45,659 ETH and a bunch of stablecoins like USDC and DAI. Remember the Silk Road bust back in 2013? That was a big one, 144,000 BTC seized from Ross Ulbricht. At the time, it was worth $17.28 million, which is peanuts compared to today's prices, but it was a major haul back then. And it's not just drug dealers and loan hackers getting their crypto confiscated. The government's been cracking down on financial crimes too, like the Bitfinex hack in 2016 where a staggering 120,000 BTC got swiped. Fast forward to now, and they've managed to claw back a chunk of that stolen Bitcoin. So, what does the government do with all this digital gold? They auction it off, courtesy of the U.S. Marshals Service, USMS. The cash from these sales goes to fund law enforcement and anti-crime programs. It's all there on the USMS homepage, the amount of BTC up for grabs, the dough it brings in, and where it all came from. Since 2014, there have been quite a few of these Bitcoin auctions. They started with the Silk Road stash, selling off around 144,000 BTC over several auctions. Then there were more sales in the following years, including a big one in 2018 with 3,913 Bitcoin and another in 2020, offloading 4,040 Bitcoin for about $37.4 million. The buyers? They're a mix of regular Joes and big-time funds, but their identities are kept under wraps. So there you have it. The U.S. government's crypto crackdown is turning criminals' ill-gotten gains into a hefty fund to keep the streets clean. Pretty neat, huh? Let's talk about Grayscale's latest curveball, They've just pulled the plug on their Ethereum ETF futures application, and the timing is pretty interesting. It's just a few weeks shy of the SEC's deadline to make a call on the spot Ethereum ETFs. So Grayscale had this application in the pipeline since September last year, right? But out of the blue, on May 3rd, 2024, they decided to yank it. Now, this isn't your everyday ETF. It's a futures ETF, which means it tracks the price of Ethereum futures contracts instead of the actual Ethereum. It's like betting on the price of Ethereum down the road without actually holding any Ether. Previously, the SEC seemed pretty chill about Ethereum futures ETFs, giving the thumbs up to a few of them back in October 2023, but when it comes to Grayscale's move, we're all scratching our heads because they haven't given us a peep about why they did it. NYSE Arca, where the ETF would have been listed, is staying mum, and Grayscale? Well, they're keeping their cards close to their chest. Now, this isn't the first time the SEC has played hard to get with Grayscale. They've been dragging their feet on Grayscale spot Ethereum ETF for a while, with the latest delay happening just this past March. The plot thickens with analysts like James Seifert from Bloomberg, who thought Grayscale was trying to pull a fast one on the SEC with this futures ETF, kind of like a Trojan horse to get their spot ETF approved. But now, he's as puzzled as the rest of us about why they'd back out at the 11th hour. And let's not forget Eric Balchunas, another Bloomberg analyst, who's been dialing back his bets on the SEC, saying yes to a spot Ethereum ETF anytime soon. He went from being 70% sure to just 25%. Talk about losing confidence. But wait, there's a twist. SEC Chairman Gary Gensler dropped some hints in a CNBC interview on May 7, 2024, that they're still mulling over the spot Ethereum ETFs. So all eyes are on the SEC as they gear up to make some big decisions on other Ethereum ETF applications like VanEck, which is due by May 23rd. Grayscale's not the only one in the hot seat. Invesco Galaxy, BlackRock, and Fidelity are all lined up with their own applications, and the SEC's got from June to August 2024 to give them the yay or nay. The industry insiders are betting that the SEC will make a sweeping decision, kind of like they did with the Bitcoin ETFs back in January 2024. So there you have it. The crypto world's waiting with bated breath to see if the SEC will roll out the red carpet for Ethereum ETFs or keep them waiting in the wings. Hey, have you heard about the Binance drama in Nigeria? So Tigran Gambarian, one of the top guys at Binance, got nabbed by the authorities there. He was just in for a chat about crypto rules, and bam, arrested. The CEO, Richard Teng, is pretty upset and is calling for Tigran's release. He's like, Tigran's one of our best, totally dedicated to the crypto world, and we need him back. It's a bit of a mess, because Tigran and another exec, Nadeem Anjarwalla, were both held back in February. Nadeem even managed to escape but got caught again in Kenya. Now Tigran's stuck in jail with some serious charges, and they're both suing the Nigerian government for human rights violations. Richard Teng's latest blog is all about getting Tigran out. He's worried this could scare companies worldwide if you can just invite execs over and then arrest them. Nigeria's been in a financial crunch, with their currency diving and inflation hitting the roof, so they're clamping down on crypto stuff hard. Binance has been trying to get some clarity on the rules since last year, but no luck. They're still hoping to work things out and set up a good space for blockchain in Nigeria. Teng's all about playing by the rules and keeping things transparent globally. Let's hope they sort it all out soon.
Alright, that's hottest news today. If you guys did find this video helpful, leave a like and subscribe our channel for more free content. Thanks for watching. Peace out.